Trading the foreign exchange market carries high risk and may not be suitable for all investors. Trading on margin, utilizing leverage can carry an even higher level of risk that can lead to a complete loss of investment funds. So before deciding to trade the foreign exchange market or using any of our software alert products, you should carefully and diligently consider your personal investment objectives, level of experience, and risk tolerance. There is a possibility that you could potentially sustain significant loss. You should not invest any capital or trade that you cannot afford to lose. It is your responsibility to be aware of and understand all risks associated with foreign exchange trading and to seek professional advice from an independent certified financial advisor if you have any doubts. Auvoria Prime does not exercise trading authority over your trades. You and you alone exercise discretionary trading authority over every trade.
And good morning. Welcome to Hawkeye session. This is, January 27th, Wednesday. We're going to be going from 7:30 to 9 o'clock. We're happy to see each and every one of you here. Hopefully we can make some money today. We'll get the disclaimers out of the way. Trading the foreign exchange on margin carries a high level of risk and may not be suitable for all investors. The high degree of leverage can work against you as well as for you. Before deciding to invest in foreign exchange, you should carefully consider your investment objective, level of experience, and risk appetite. The possibility exists that you could sustain a loss of some or all of your initial investment, and therefore you should not invest money that you cannot afford to lose. You should be aware of all the risks associated with the foreign exchange trading and seek advice from an independent financial advisor if you have any doubts. This is the Hawkeye session. This is a live trading room. It is for educational purposes only. No financial advice or recommendations will be provided. Any trade taken during this live session is not a recommendation or a suggestion that you should also do the same. Past performance is not indicative of future results. Do not trade money that you cannot afford to lose. And before trading live, always operate with a written trade plan that identifies the rules for entries, exits, targets, and risk management. And with that, let's go to the charts.
The Aussie stuff Swiss just came in.
Aussie Swiss. All right.
And it's looking good out.
Let me change my screen here. And we're going to go to...
I actually just jumped into it.
Oh, my. Sounds like...
Early start.
Sounds like starting right out of the chute. Okay, Aussie Swiss. Let's take a quick look at that one. Aussie Swiss. Here we go. Aussie Swiss, we're going to zoom out. See how we have now 2 red, 1 green. It's a downtrend. We have a down arrow. That's and there's a down arrow. Do we have room for a short? Here's the arrow. Do we have 20 pips? We have.
That's made it. Yeah.
It's close enough for me. And we'll go and take this thing short. I'm just going to come up here, click sell, and I am in the trade. And now I'm going to set my stop and my target. So we have the Aussie Swiss. Going to right click, modify or delete. 440 pips to the stop, 20 pips to the target. Going to click the blue, make sure it propagates in the bottom to where I take profit. Click the red one, make sure it propagates in the stop loss. Click the red bar, and we should be all protected. We have our target. You can see it's just above the green zone. We have our stop just above. We have lots of room it's going to have to get through this red zone before it hits our stop. And it has clear sailing up until the time it reaches the green zone. We did have a hit over here.
Thank you, Al. I was just going to ask you, could you do that?
Yeah, let me move this out of the way. Actually, let me just move that out of the way. And we can kind of monitor some of the ones down here. This has a little log of all the different alerts that we had. So here's where the green zone started. This is the area that was created. The zone was created. We have a hit here. We have a hit here, and we can expect we can get another retracement. Well, we can't expect anything, but the odds are really good that we can at least get our 20 pips out of it. And I'm not seeing anything that would tell me otherwise. This looks like a good trade to me. We had it is a downtrend. I'm going to put an arrow in. Come over here to my little drop-down tool, find out where it says down arrow. Click on that, and I'm going to put it up here. That way I know we're in a downtrend. If this zone goes away, and if I have an arrow here with no red zone, then I know that the trend has changed possibly, and I have to reset my charts. There's a little arrow that's still hiding here. I need to get that one out of the way. Mm-hmm. Sometimes it's hard to get these things, so I just right-click on the objects list, and I find out where this arrow is. I look in the list over here, and I can scroll down and see where I find arrows. There's one, and if I click on this, I should have a little, if I get the right arrow, the little white dot should pop in there. So is there a little white dot? See this, the
No.
white dot, I'm on the wrong arrow, so I'm going to take that one off. And I'm going to try and find the next, oh, there's one up here.
It's funny. I was just going to ask you, how can you differentiate? So
Yeah,
I'm glad you told us that.
You click on the little square, you see the little dot. Now I can delete that one, and it goes away.
Excellent. Excellent.
Nice little tidbit of information off that. Any questions so far? Again, we're happy to have each and every one of you in this room. Please, if you have any questions, please put them in the question answer box. We're more likely to see them, and we'll try to answer them as we go along. And if you have any questions, like I said, any questions, there's no, I don't consider anything to be a stupid question. If you don't know the answer, you don't know what you don't know, and the only way you find out what you don't know is to ask the question. So don't be afraid to ask away. We'll take a look at some of these other trades. Right now, we are in this one right now. We're just looking, and we may be in for quite a while. Who knows? There was a trade that we took Monday. It was there was a trade history here. It was a euro yen, and I got in money. I don't usually like keeping in. I'm not one to be holding trades for weeks and months at a time, or I don't even like. I usually like it in and out within a day or so. But this one, it kind of went against me a little bit. It still maintained within this, but it never hit my stop. And when I looked at this morning, I saw that we had a sell on it.
Al, we're not on the chart for euro yen.
I know. Oh, that's right. Well, I was just going to do that thing. So yeah, here's the euro yen chart. There we go. And so we were I got in the sell back. It was on the 25th, but you can see it was just bouncing back and forth, back and forth, back and forth. And so we have like 1, 2, 3, 4, 5 red. We have 1, 2, 3, 4, 5 green. Basically, it's in a very tight range. If you have equal number of red and equal number of green, you want to have at least a 50 pip range between the red and the green. Well, this one, I have 28 pips. So what I did this morning, when I saw that this thing came down into the greens, I was short. But when I saw it came down into a green zone and I was back to being break even, I just closed it out and said, at least I just closed it out because it's just going to keep on going back and forth for a while. If it breaks down, breaks down. And I'm okay with that because I didn't lose any money. I just let it go. And usually what I'll do is if I'm here during the day, I'll watch it. But overnight, I just if it stops me out overnight, it stops me out overnight. But when I come back and take a look and see where it is as far as the profit range goes, if I see where I can, if has a nice drawdown and I can find out I can break even, then I'll do that. But you can see the blue line is where I got in. This is back on the 25th, so I got in somewhere right in here to go short. This zone wasn't here at the time, and it just kept going back and forth. It did get a little bit of profit, but didn't get enough to get my target. The target on this thing was way down below here. So anyway, I did get out of that trade. I did make a little bit of profit on it, and we just move on with it.
Actually, Al, I think the one Christine was talking about was the British US, because there's a Q&A. Can we please have a look at the British US? It took a mauling a couple hours ago.
US is over here. British US. And yeah, this was one that this happened before I came to the charts this morning. Looks like this is going to be a nice one here. Zoom out. I'm all the way on a. Now looks actually it's a contra trend trade, but you have lots of room to the nice strong move up. It is a contra trend trade. You have 3 green, and this looks like it's probably more of a pullback. It doesn't really fit the criteria that I see because it's in an uptrend, and we're only taking with the trend trades. I'll move my arrow up here. It's in an uptrend. We have a down arrow, basically looking to wait for an up arrow. What I could see possibly happening with this, we do have a little bit of a, this one has lots of room to the downside to this whole move up here. Let me see what the range of this one is. This one has a range of 134 pips. And basically we'd be trying to get 20 pips out of it. Now this was a nice little, we didn't really get, we got the bounce, we got the arrow. So that'd be a bounce arrow go, but we're in an uptrend. So this really would not be a valid trade based on the rules. There are some other rules that could apply to this one. I do like the fact there's a lot of room to the downside, but I'm also looking at this thing could possibly come back down as a retracement. I actually drew the retracement tool, the Fibonacci retracement. Here's the low, here's the high. We had the crossover of the moving averages, and right now it's coming into a 38% retracement of this full up move. As this thing comes down, I don't want to be taking this thing short right now, especially now. You would certainly have had enough room from here. You have gotten your 20 pips. And we don't know where the bottom of this is, but right now I'm looking at this being more of a pullback to maybe the 50% or 61% retracement level. Get a hook, get an up arrow. If I can get it, come back down with one of these lines, get an up arrow, then I'd be willing to take it short, take it long with the trend. And then you having a, maybe get a tighter pip stop. If you look at these zones, they're actually only having, let's see what the zone distance is from here to here. We're looking at 17 pips. If this thing pulls back down and can't cross this line here, comes back down and gives me an up arrow after crossing the moving average, if you can get enough to 20 pips from that, as this thing goes down, the moving average is coming down. And if the moving average could come down to, let me show you if I can draw this. As the moving average comes down, and if you can get the candle to come down into one of these zones, come back up, cross the moving average once above it, and get 20 pips to the upside, that would be your trade. This would be the a Fibonacci pullback. And then your stop would be the 5 pips below this next line here. So right now, if we were to get an up arrow, you still couldn't take it because you're still below the, you need to have a close above the moving average with an up arrow, and then still have 20 pips to the upside.
Now, what are your thoughts on if a secondary arrow, a downward arrow, were to appear? Would you take it then?
If a secondary arrow were to appear, then I think you could take the trade, because then it'd be following the strategy with the 2 arrows in a row to the downside. This does have it. I do like the fact this is a really strong move down. However, a lot of times what happens is when you get a strong move down, it should base a little bit. It should strong move down, base. And if it's going to continue, it should base a little bit by 2 or 3 candles. I like to see at least 3 candles in the base. So if we were to have a little, let's see if I can find a drawing tool here. My, let's see, where's the little rectangle tool? I'm trying to find that.
Is it there, T, where it says T?
I don't think so. That's text. That'd be a text.
Yeah, but does it not draw? Okay.
I don't see a drawdown. I'm not seeing any drawdown.
I thought it drew
I know there's one here someplace. View, file, insert. Oh, here we go. I don't think this is right. Let's try this drop down. Fibonacci lines, lines, lines. Shapes, here we go. Rectangle, that's the one I want. If we go and we get a little bit of a zone in here, now listen, this thing keeps on dropping down, so we have to wait for it to base a little bit, and then if we can get another arrow, then I maybe want to take this. There's really nothing over here that's telling me that this thing is going to get rid of this there. There's an area over here. So basically, if I'm looking, here's like there's a rally. Here's a little bit of a base. There's another rally. And you do have a little bit of, you do have some consolidation right here in this area right now. So right now it's a nice little trade right now. If you did get in up here, you're probably a very happy camper. I didn't get in because I wasn't at the computer at the time, and I'm not going to chase it. There's an alert for an Aussie yen. We'll keep an eye on this one. Let's keep this one in mind, the British US.
Just a note on the Aussie Swiss, it's crashing down. And Isaac was wondering if we could look at a US 1 hour CAD.
US 1 hour CAD. US. Okay, let's take a US. Let me take a real quick look. US 1 hour CAD. US CAD 1 hour. Strong move down. We have a little bounce off of here. If it's you're looking at it as an uptrend, you've got a lot of. It's in the downtrend with an up arrow. I'd say no trade on that one. Let's go to there's the US CAD buy 1 hour. That's it. Ooh, that one just came up.
It just popped up.
Yeah, we don't want to take that one. I can see it right now. We've got lots of red on the upside. We don't want to be buying into all that red.
And guys,
1, 2,
we're
3,
actually
4,
trading
5.
on the 15-minute, just so you know, like we're going according to the developer's strategy, which is on 15-minute charts. The 1 hour is more like a swing strategy type thing.
I mean, it's one of the strategies, so we're really pretty much focusing on the 15. We can take a look at them. Now this one we're looking at, we're just going to zoom out. See, we're uptrend. We are in an uptrend. We have more green than red. Zoom back in. We have the arrow is all the way over here, so really we're way out of the range. This would have been this is a nice little bounce arrow go. You would have had plenty of room to for protection for your stop, plenty of room to the upside. If you had this one, if you got in on this candle, you would have had 37 pips to the upside. You've already had your 20 pips out of this thing. You have just been filled here, and your 40 pips to the downside would be this bottom. You have had this whole green zone as a buffer, and you've had plenty of room. You've had it in an uptrend, but I can't take this now because one is way too close to the target. Aussie yen, we can take a look at that one. Aussie yen is right here. Gonna zoom out. Let's zoom out as far as we can. We have 1, 2, just cut another red zone. We have in a down move with a down arrow, and we can zoom in. Here's the entry. Do we have room to the downside? Let's see here. Here's our entry. Here's our target. We have 31 pips. We can take this. We can take this short. And I'll put my target in. And a second here. Aussie yen, Aussie yen. And let's see, we go to the object list. Go to open the trade, and the price on this was, I like using the price that the alert came in. What was the price of that, Eva?
The alert was 69.70. Oh, sorry, 79.917.
79.919. We'll call it 770, and then so 79 is going to be the target. So target is going to be 79. We'll just call it 79. Yep. And the stop would be 79. Let's see. Oh, I didn't get the target in there, or the open it. 79.19. Where's my blue? 79.91 is the. Let's try 79.90.
Yeah, 79.91.
91.
Yeah.
That's better. 39.91. That was the entry. There we go. That's better. Target 79.91. 7.1 is the target. Here we go. And the stop is going to be 70, it'd be 80, 31. And we're in that one. Fits all the criteria. Gonna move this thing over. So I'll get some good trades this morning.
Yeah.
And so we're in that one. We're gonna make sure I have all my, put my stop and my targets in here. Right click, modify, 440 pips. That's the 400 on the short side, 200 on the target side. Click the button, make sure these are filled in, and then click the bottom bar. And right now we have our target set, our stop set. Blue one is our entry. Green is actually where we got entered. We actually got in at a little bit better price than, a lot of times you'll see when you get these candles, when they close, a lot of times there'll be just a little bit of a pullback before the next, as the next candle enters. So sometimes you can get a little bit better entry. I like the fact this has no wick at all on it. Strong move down, no wick. This one has strong move down, no wick, fell further. Strong move down, no wick. Good chance it's going to fall further again. This is a very steep trend. And now we do have some little zone right here that could cause us a little bit of a problem. But this is the origin. Down here is the origin of this big move. And our target's somewhere down in this area. So right now, looking good. Any questions about what we just did?
If you guys are understanding what we just showed you, what Al just showed you, just put a 1 in the chat, please, just so we know that everyone's okay.
Good.
Okay,
Good.
awesome.
And let's see what other, so we don't, now just wait for the next one. Nicely little thing, we have a little counter over here so I can kind of gauge without having to change charts all the time. I can see how I'm doing overall. I have a CAD Swiss. Now this CAD Swiss, I've had this one for, I think I get into that one on Monday. It's still sitting there. It hasn't been really playing very nicely, but I'm still okay with it. I have a 40 pip stop on it, and so we're still good. We're already up 4 pips on the Aussie Swiss, and we're already up 2 on the Aussie Yen. And let's see here. Let me look at something. Take a look and see how strong some of these things are.
Excuse me, Al.
Yes.
When you get a chance, Mark would like you, he's not sure what you did with the objects. He does understand your stop loss and your take profit, but not the objects.
What we need to, what about the objects? See, not sure what the
Objects,
but
Mark.
understand how to make the stop loss and take profit. What I just did when
Maybe where to find it and stuff.
Yeah, I right click anywhere on the chart, and you'll see there's an objects list. And you click on the object list, you'll have the whole list. Now this has all these rectangles that are these zones that you show here. They're popping up here. So if you were to click these, the zones would go away. But what I did is when I first loaded the chart, I made a template. I basically put 3 lines on, and I have it, and I labeled it stop, open, and trade, and I give them all different colors. So this way, when I get into the trade, or if I'm looking to see where the line, to find out where the entry is, when you get the alert that has a price to sell or price to buy, I just click on this where I have it for the open to the trade, and I know that it's I had made it with an aqua color, so I know that's my entry line. Then you can click on the parameter, and you can put the exact the value that the alert came in on. You can put that in. That way you know that's where the alert was triggered. Then you just click OK, and that sets that line. And then I can go to my target, which I usually do the math on where it was. Give it 20 pips to the upside or downside for the target. Change the value in there. Click OK. And then I go to set my stop, which is, again, it's the open trade plus or minus 40 pips. Come over here, left click on that twice, window pops up. and set the value, click OK, and then that sets my target. I usually have green. My entry, I usually have blue. And then the stop, I usually have yellow, or I've been changing it as I go along here. I've been changing it to edit it, and I just bring it up to the common. And I've been changing that to a orange. And the reason I'm doing that is because sometimes you draw a Fibonacci line which has yellow lines on, so that way I don't get those confused. Hopefully that answers your question. Let's see, take a look at the British US.
Yes, you did
US.
answer Mark's.
Okay, good. Let's take a look. This one's still working out okay. We see we're up. Basically, we're looking for a 20 pip target. Now, if this thing and I'll be watching this thing. If it gets up to like 15, 16 pips, I'll be getting back on the chart if I can remember to do that, and get a little gauge on whether or not I want to pull the trade before.
I'll keep my eye on it for you, Al.
Yeah, keep an eye on that. So we want to look at the British US. Someone had a question about that. British USD.
That was the one that tanked.
That's the one that tanked. Did you take it long or did you take it short? That would be the question.
Yeah.
So here we go. We have zoom in. We have an uptrend. 1, 2, 3. So it isn't an uptrend. I'm put the and we'll put this over here. That's where the uptrend started. Let me just take this Fibonacci out of the way here. Sometimes you can just click and get those little white dots in there, and then you can hit the delete button, and it'll go away. So it isn't an uptrend, and we're going to scale in. So we want to be taking it. We only want to be taking it short. Now we did have a down. We did have a down arrow earlier, and so we have. So we know we're in a uptrend. We had the down arrow, so we really want to be taking. Now, if you took it on this one, okay, with the down arrow, you would be looking at. Now, I'm not sure if that would be a. Let's see. This would be where you have gone, but with it being an uptrend, you wouldn't want to be taking that one by the rules. If you had an uptrend, you have the close here. Now, do you have the 20 pips to the upside? I'm thinking you may not have that. So here's your arrow. And you have 11 pips. So that would be a non-trade because it's too close to that zone. You have another up arrow. Let me take a look at that one. And the entry of that would have been, I'd have to take a look at another chart here. I think the arrow, it looks like it'd probably be here.
Actually, yeah, Davey's saying that the stop loss was hit. It was a buy trade for that up arrow, I guess, and the stop loss was hit. But guys, you have to remember, not every single trade is going to work out.
Right. Now, if these are up, if you're in an uptrend with an up arrow, you don't have enough room to zone, so that would be a no trade. I do like. I mean, and honestly, I like this to the downside because of the move. But on the same token is it doesn't, and it has lots of room to the downside. I like this one. I like this thing best as looking as a more of a Fibonacci trade. And the reason why I say that, let me zoom in here a little bit, is we have a, let me see what this looks like on a 1 hour chart, on a higher time frame chart. There's a 30-minute. Let me zoom in, zoom out a little bit, see what the trend looks like on the higher time frame. Still on an uptrend there. Let's go to an hourly chart and see what this one looks like. It's still in a very strong uptrend, even though this move right now looks like a nice down move. What I'm looking at more is the fact it's in an uptrend. I like this from here to, I like this move here. So what I'm going to do is, and I also like the fact that we have a nice move up. So it's in an uptrend, so we want to be going long on it. We're seeing a pullback. I'm looking at this move right now as a pullback of this up move. So this to me would be almost like a textbook Fibonacci retracement type of thing. We're in an uptrend. It came up and made a high. We're having a retracement. It crossed over the moving average. It's coming back down, and right now it's retraced at the 38%. Strong move down, and just find it got a little bit of a wick right here. Now, if this thing can come back up and cross over this moving average, you probably have enough room to the upside. Then your first target would be this, the zero line. And would that give you 20 pips? That gives you 40 pips to the zero line. And then your stop would be once you get the crossover, the stop would be 5 pips below this line right here. But we have to wait for it to get done moving. Right now it's at 38% retracement, heading to the 50% retracement of this move. And these are really quite powerful. This is a fairly powerful strategy, and I like it because you're getting the nice strong move to the downside, contra trend. It's contra trend right now, but with a strong up move, and you see you even had this is still in a slight. This made a high, made a higher high, made a higher high, and now it's taking out a couple lows. It took out the series of lows right here, but as you come over across, you can see that there's a strong move up, had a little wick, pulled back with a wick, made a new high, came back, and right now here is where it was basing. Now we're just waiting to see what's going to happen with this. If I go to my 15-minute chart again, and you'll see that now the question is going to be is where is the range? Because the target is going to be your zero line or the red zone, probably the real red zone. But you can see this is pulled back 66 pips. It's a really strong move down. But it's also, which means you also have 66 pips to the upside, which would be your zero line is your first target. And then your next, there should be another line up here. And then if it pulls back 38%, then the 30% overshoot of the zero line would be your second target. So if this thing turns around right now at a 38% retracement, this will be your target 1, this will be your target 2. Actually kind of like this one. But I said you need to get the up arrow crossing over the your moving averages. But as this thing pulls back, as this thing goes, bases over here, as it starts going sideways inside this zone, now it may drop again, so you have to be aware of that. But that's going to give this moving average some time to get down a little bit lower to give you that 20 pip range once it crosses over the moving average. That's the way I kind of read that one. And I'll take a look at our New Zealand yen trade here, see how that's doing. We'll keep an eye on that one.
In the Q&A, we've got Robert is saying that the U.S. Swiss swing that we took on the call got stopped out overnight. Oh, I guess there was a swing trade for it yesterday. Would that have been through Dante's session, Robert?
No, last night it was Nate's session. They were live trading last night.
Okay.
But listen, sorry guys, this is not going to win 100% of the time. Keep that in mind, right? Don't get discouraged because you get a stop out. If you, and this is something that I was thinking of the other day, is if you're actually getting stopped out and it hurts, it means you're probably over risking or you're not ready to go live yet.
And that's probably very true. Well, here's the Aussie CAD. And so let's see, make sure we got the, yep, Aussie CAD. Zoom out. And we're coming down. So we have 1, 2, 3, 1, 2. So it's in a downtrend. We have a down arrow. As we zoom in, and we check and see where the entry of this thing would be. So we have a entry to sell at 98.13. I can tell right now it's probably not going to work. But my crosshairs, get my crosshairs, put it at the close of where the arrow is, look down 20. And that's only 7 pips to the downside. So that right there, that's a no trade. So we are in a downtrend. I'll mark my trend. I just do this as I go along. As we check these things out, I just get an arrow so I know which direction is the last check on the trend was. Yep, 3 top, 3 red, 2 green. It's in a downtrend. Yeah, I do not win every trade.
Hey, I'm back at my computer. Sorry, I was doing a couple errands, so I'm going to go through the chat real quick in a little bit, and I think people are a little concerned that they had a perfect bag entry, and it didn't go right. It didn't work out.
Which pair was it?
The one from last night.
What it was? I don't know what that was.
That one was Davy. Well, that was the British US when it tanked overnight.
Right.
Like a couple hours ago, it tanked, and Davy was saying that it was a perfect bag entry, and you know what? Sometimes the market's not going to cooperate.
You're
That's
not
what was the British
win.
US, what he was talking about.
Okay, because you're not going to win 100% of the trades you take. You could take 100 perfect bag entries, which is your idea, right? Your ideal is to take the best trade entries that you can take, okay? But out of those 100 that you're going to take, you're going to lose 20 to 30 of them, even if they're perfect. That's the reality.
This one right now, our Aussie yen, we're taking a look at that one. We're still doing pretty good on that. It's still nice move down, still. And when we see these, one thing about it, when you see these really strong moves down, a lot of times what that's going to do is as soon as it hits a zone, it'll just bounce right back up again. And if you start seeing a wick off of this, what I do is I look over here and I look and see where the lowest wick is. And this is something you may want to keep filed in the back of your memory bank. As I see where the lower of this wick is, I come over here to the left, and I see when I run into a wick, there's probably a good chance, and you can see there's an arrow right here. And right now we're still okay with this, but we could expect a little bit of a bounce because there's a little bit of a wick here, and also now if we can get down further down, and we run out of wicks, like here's the wick. Once you get past the wick and you get into a body of a candle, that after it can clear this wick, this is the next entry, which is right where our target is. Maybe you want to move that target up just a little bit so that it can catch this little area right down here. But I'll oftentimes go and see where the price is, see if it runs into a wick. If it runs into a wick, when there's a wick, that means there's some buyers in here. But when you come into it and there's no wick, you have the body, all the buyers started until where the wick started. And that's kind of all the way down here is where that is. So once it can get through this point here, there's a good chance it's going to be clear sailing down till you get to this area. It's just a little thing I've observed over the years. Because wherever you see a wick, that means that the sellers drove it down and the buyers pushed it back up again. And you see from this little wick right here, you don't see any, well, actually, if you change the colors of these green bars where you have the red bars, you'll probably see some red bars in there, but it's maintaining that trend. That's why all those are green. Right now it's maintaining this trend because that's why they're all red. You'll probably get a little bit of a bounce. I expect a little bit of a bounce right where it is. You can see it's starting to form a little bit of a wick, but we still have plenty of room. And if it comes back up and retests it, we still have a nice little trend. Here's like a drop. Here's a little bit of a wedge right in here. If you draw, have a high, have a low, and then a little bit of a wedge right in this little area right in here. Nice little down move there. Connect. There's a high. Here's a lower high. Here's a low. Here's a higher low. And here's a little bit of a wedge. A little bit of wedge, broke the wedge, keeps on going down. It'll probably form another little wedge as it pulls back. You're going to get pullbacks. No question, it's going to maintain.
Al, I wasn't here, but AJ, did you guys take that?
Yes, I did.
Good. Oh yeah, okay. I see you in profit by what? 3 pips thus far?
3
30.
pips on that, and Aussie Swiss. I'm up 9 pips on that one.
Brilliant.
The CAD Swiss. This is one that gives me a little concern. This is one we took back on Monday, I believe.
Oh, you're still in that sucker?
Yeah, I'm still in that one. It hasn't stopped me out. It hasn't taken my profit, but it's kind of in a range. Let's take a look at that one. See what that one's doing. I may just want to get out of that before CAD Swiss. And we took that one short. No, wait. Yeah, we took it long. We took it long. There is up. We're in an uptrend. Lots of green. Zoom back in again. Still in an uptrend. So I did have that. I am on a buy on that. So that's well within the range. But now if we scale back out, we'll see what's really happening here.
Now, we have in the Q&A, Azariel is asking, is it too late to enter the Euro Aussie? I don't recall seeing an alert. Did you see anything else?
I don't remember seeing a Euro. Let me see. Let's scroll back down here. Euro Aussie.
While you're looking at that, I want to address a question that I saw in the chat. GBP USD met the criteria, but the correlation wasn't there. All the correlation with what? Just because it starts with a GBP pair doesn't mean that they're all going to move all in the same direction at the same time for the same amount of pips. I don't know what strategy specifically identifies adding correlation to the mix, but I haven't heard that, especially as part of strategy 1. So it maybe it adds more accuracy in certain cases, but have you heard about a correlation requirement in any of the strategies, guys? I
have not.
I have not either.
Oh, okay. All right. I just wanted to check and make sure, because sometimes I miss things, right? Sometimes things are said that I never heard before. So just want to make sure we're all on the same page.
With this Euro Aussie, where was the alert on this one? This was at, basically it was, make sure we're on a 15-minute chart, which we are. 1, 2, 3, 4, 5. So this was about an hour ago. So this is about 7:15 this morning. Where we got this one. Here was the entry off this, where the blue line is. And it's just about right at our 20 pip target, if I'm looking at this thing right. 57.22, 57.42. See, 22.2. Actually, we're already at the target. Let me double check this here. Object list. Open trades. Parameters. 57.22, so 57.42 would be the target. 57.42. That's the target. It already passed the 20 pip target. Would it be now? I guess the question is it too late to get in? I do not chase the trades. If it generates another arrow, and you still have the 20 pips to the trade, yes, then you could take that trade. Right now, I would not take it when it's already 20 pips down the road. That'd be chasing the trade. Hopefully that answers your question. And that looks like it was a nice trade. This was a classic bounce arrow go with lots of room to the upside, a lot of green bars, more green than red. That would have been a classic bag entry right here. That was at 7:15 this morning.
So we got a. Oh, I'm sorry, Al. Go ahead.
No, I said I would have taken that one if. But I wasn't here to. Well, I was sitting here, but I didn't look at that one at the time, so I didn't take the trade.
So we've got yeah, let's do Euro, New Zealand, and we got GCAD, and then we've got a question about correlation one more time. So maybe we'll go over that after we do the analysis on the trade, and we'll see if we take it.
Yeah, Euro, New Zealand. Zoom out, see how many red, how many green. Lots of red. So we want to go only shorts. We have an up arrow. That's a no trade. British CAD. Let's take a look at that one. Let me put my arrow in here before I leave. Arrow down. This is because we are in a down move. So we don't want to take that one. Next one is British CAD. And we're going to go with British CAD. British CAD is over here. And British CAD, it's a buy. Zoom out, see how many green, how many. It's a buy, so we have lots of green. And so we can take that long if it measures out to be correct. So we have a buy at 168.43. Object. Open trade. Edit. 1.6843. Did I get that wrong? British CAD. 1.7481, that's the one. 0.7481. There's the entry. Target. 7475, we'll call it 1.75, 1.7501. There's our target. We don't have room for the 20 pips. That's a no trade. But we'll put our stop in here while we have it marked. And that's going to be 1.7441. 0.7441. And there's our stop down there. I'm changing the colors on my stops as I go along. Change it to an orange. Just to offset it from the other Fibonacci lines. So that's a no trade as well. And we had an Aussie CAD earlier, which I think we said was a no trade, I believe.
Oh, your UCAD's on a 1 hour chart, huh? Did you fix that?
UCAD is on it. I didn't mean to. We were looking at that and I probably didn't change it back. That would make a difference.
CAD Swiss is on 1 hour as well.
Yeah, I need to check all my charts to make sure they're all in a 1 hour or a 15-minute.
Hey, I do that too. I switch to times and then I walk away and I'm like,
we do want these two on 5 minute. Okay, we want this one on a. If I have this on a 1 hour chart, I'm going to be getting 1 hour alerts.
Right, and then you're going for a swing where you're going to hold that trade. Right. You could hold it for like a week, you know.
Yeah. And I said, there's nothing wrong with doing that. That's just not, we're trying to, one thing about keeping on the 15-minute, we're more apt to get trades that we can take and we can see the progress of them as we're in the room here, taking the trades.
Yeah, and we can generally exit the trade by the end of trading day. So 4:30 Eastern time or 5, whatever, end of New York session.
Yep. We were looking at the CAD Swiss. That was one we took back in Monday, I believe it was, and at least I'm still in it. Not real happy with it. We have a buy on it, I believe. Yeah, we have a buy on the CAD Swiss. Looking right now at this, I'm looking like it's more in a downtrend, but let's scale out and see if that still holds true. It may have changed directions on me here. Right now, as I zoom out, it is in a downtrend. I'm in a buy situation with it, and it's not really behaving itself from my standpoint.
It's
But
not.
it does look like we are in a downtrend now. It did switch directions. It did over the course of the last couple of days, so we are now in a downtrend. And I am in this thing long. And so I will probably be getting out of this trade before it takes I don't want to take a full stop.
Al, I've got a little point of clarification on that CAD Swiss there.
Okay.
If I can share my screen, I'll show you what I just drew, and
Okay.
it might bring a little bit of
I'll stop sharing.
Added value to that there, since
Okay.
a little bit in a pickle, right? So here, trend line, bang, 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 break. So you might have something happen here. Now, this is a big wedge. I'm trying to see if I'm going to do it this way or if I'm going to drop it down to here. Or no, we're going to do it this way. How about that? Look, right here. So you got, boom. So you got a wedge. Now, I hold on a second. Little guy's playing with toys. I'm not forecasting anything, but reality is, because it broke the bottom of that wedge, it could go as deep as here, or it could in reality come back up, pop, and come up here somewhere. But reality is it could make a lower low.
One thing I'm still okay to a certain degree is that my stop is in the second zone, basically. So as two zones, and it's going to have to get through that level of. Let's see.
You can share your screen again, Al, because I stopped. I said what I needed to say, and I hope that brings a little bit of clarity about what I saw around that. But you're absolutely correct that the trend did change at that point.
Yeah. So basically, we have a little trend here. This is the trend that Matt was talking about right here.
Yep, right there, my friend.
Yep.
Up a little bit more.
It did break, but it broke right into this green demand zone. So what I'm going to be looking to see if it can come back up and retest this wedge, and it starts going back down, I'll get out of this trade, because then it looks like it's coming down lower. But right now, once it breaks through this pivot down here, if it breaks through this zone, then I can save myself a few pips at 6951 area. I can save myself a few pips rather than taking a full stop out of 40. I can save myself a few pips if it comes down to the 6953 area. And I'm willing to give it that much room because right now I have this zone as some of a wall between me and the stop.
But that's also one thing, Al, is you can take that pullback because you position size properly. You're not going, oh crap, like that's a big drawdown, right?
Yep.
If you're over risking in your trade because you want to, for whatever reason, that's fine, right? Like if you have couple $100 and that's not all your capital and you just want to like max out the amount that you can make on it, then that's understandable. That's fine. But you need to understand that when you get a move like this that comes against you like that, it's going to happen and you're going to need to know what to do.
Right.
And you can't go crazy, right? You can't lose your brain because things don't work out the way that you thought they were, even though your setup was perfect. You can have a perfect setup and still not go the way you want.
Can you see my trading views chart now?
Yes, sir.
Okay. This is the CAD yen. This is looking at it under the microscope. This is what we're looking at here. Here's where it came right down, and you can see I've got a blue candle right here. So right now it came down, it hit this trend line, and it wicked down, but now it popped right back up again. Now our moving averages are all consolidating right up here. Here was what I call a little bit of a trap. We had this was the start of the move, and it just bounced around. This is what it's been doing the last few days. It wicked up. It actually may have given me a chance to get profitable. I'm not sure, but right now it's just ranging inside this, and this is a relatively from this range from there to up here. That's basically a 40 pip range or 50. What is it?
40, right?
30, yeah, about 40 pip range. Well, my stop's 40. So right now I'm still okay. This is the area that I'm looking at. I'm concerned about right here. If it can come down and break through this D area, here's where it broke the wedge, but came right back. It was rejected. So this area right in here. Let me move this up. Move this down a little bit.
Yeah, that's a great observation, Al. I would be very concerned if it broke the D. If it broke the D, I would be out of there.
Yeah,
because that's a very strong downtrend. It's basically a continuation. You see how you got that big zone of consolidation for CAD Swiss that's been since like the 22nd of the month of last month. So 22nd till 22nd till today. It's all been consolidating up and down and up and down. Well, the reality is it has a 60% chance to break to the downside. So a continuation of the previous trend's move. So here we're going down and it could continue coming down again. Higher likelihood, but we'll see.
Yeah, we look at this on a higher time frame. Here's a drop. Actually, this whole sideways motion is actually the basing.
Yep. It could pop up too. It could make a new high, but there are odds on certain things, and we just have to play it out.
It's not looking. I would not be in this trade in this direction. I would not be taking it short right now. Right now, it's in a consolidation. I look at this as a trap. And you see where the wick came down. Spread out here. The wick it broke the trend line, but it couldn't close. So there's a good chance it's going to come back up and retest the top of this trend line. Now, if it can come back and retest the top of the trend line at around the 69.82 level,
you could maybe get out.
Then I may
break
be able to
even.
get out because right here that's right where I got in at 69.84. So we'll see if it comes out. Right now, this candle right here is a bullish candle, and the range, my wedge, this thing just broke right about there. It got rejected. It's in this zone. So from here, if I can scroll down, let me zoom in a little bit more if I can. Change a little different time frame here. We have this low. If I can take this trend line, bring it down over here to this low. Here's the anchor. Here's a hit right here. You can see it just barely penetrated it, and now it's coming back up. So right now it's trading inside this wedge, this bottom of this wedge, and then we have another trend line coming down from here.
Well, we're looking for a pop, right? It's gonna break out of where it is now eventually, and it's probably going to be a pretty impulsive move from what we've seen over the course of our wedge trading and whatnot. When it breaks out of this kind of consolidation zone, especially since it's been going on for like the last, I don't know, 4 or 5 days, it coils up and it creates a lot of pressure, and then wherever it's going to go, it's going to pop. So we're not sure at this point where it's going to go, right?
Yeah, and we can't predict it, but what we can say it is forming a wedge. We have here's an anchor, here's a hit, here's our third hit. It penetrated, but it didn't close. Here's the anchor, here's a near hit, here's a hit, and so right now it's just trading inside this range. If I decide to pull the trade here, this is my entry up here. This blue line up here is where the entry was. I mean, I was willing to give it 40 pips. Well, right now, I still have some rebar. I still have a wall between my stop and where the price is. It came into the wall. It was rejected. And you can see just the angle of this. If you see how strong this move down is, that's oftentimes you'll see that. Look at the strong move up. It came right up, hit it into the supply zone, and was rejected. This one's coming pretty strong. It's not a gradual trend like this one. This one, see how gradual this is. This is like a rocket ship going up. This is like a knife falling down. But as soon as it hits the zone, it gets rejected. Because what it's doing is, and this is in fact, someone asked me earlier, should I get in the trade? We had the arrow and it was out of the zone and it was just going pretty strong up. And I said, no, I wouldn't take it because it'd be like trying to catch a falling knife. If you were to take this, when it comes that hard, usually what happens is it comes right in and it comes right in. This is this target. This was the target that was shooting for. And the big money is driving the price down real hard, hoping people sell. Because as soon as they get down and they sell down here, they're going to start taking stops, and they take stops all the way up. And then after that, it breaks out of the top and it goes on up like it wants to. So as long as it stays inside this wedge, I'm staying in the trade. If it comes back up where I get maybe just give up a few, I can see where there'll be a little trap right up in here. Where it comes up, it may break through. It may break through right about where I got in. And if that happens, I'll get out of this trade. But I'll see if I can get out of it at a little better position than I am right now. I'm willing to take the loss. I prefer not to take a full stop. But like I said, if it breaks through this green zone, I'll save myself a few pips and not take the full stop out. And then I might actually have a chance to maybe get in at a little better price if it does start to reverse.
Yeah, if we get another arrow, right?
Yeah, but right now it's in a downtrend. And we'll just have to wait and see. But I like the idea that this thing came straight down. I don't like the fact it came down, but the fact it came down, this was rejected off of this wedge, this bottom trend line. That gives me some degree of comfort that this may come back and retest that upper wedge line.
Hey guys, we just received 3 alerts.
Oh, okay. Thank you, Eva.
Okay. I'm looking at the Swiss yen. It's a viable trade.
Oh,
let's take a look at that.
Yeah. I haven't looked at the other 2 yet. The Kiwi US or the
Swiss
pound.
yen. Here we go. Here's the Swiss yen. Swiss yen is a buy, 116.98. And we're looking at, we're zooming in, we're zooming out. We are in an uptrend. We have an up arrow. We have
just enough room.
We have just enough to 98. We have just enough. It may even it's close enough to where I'll be willing to take this one. So this is a buy. Swiss yen.
Yeah, I'm taking this one too, Al.
Yeah, I'm already in it, boys.
Oh, well, look at you. Hey, later on, I'll show you. There's a really nice wedge on Swiss yen, and that huge candle that came up, it actually broke the wedge, and now it's coming back down to retest the top of the wedge. So you can probably see that. But anyway, there's just a little bit of additional insight into why this would be a really nice trade potentially.
I jumped in with Eva. I got in early.
You did. Look at you.
Of course I did.
I know you.
While you guys were discussing, we were trading.
Yeah, exactly right.
Go figure. All right, let me.
Yeah, 116.98. We're going to put that in. We're going to put our.
Let me take the trade before I miss it.
We're going to go ahead and just come down here. You don't have to do all this stuff. I just do that just as a force of habit. So Swiss yen. So we come down to your. We could just take this off right now. Come down to where you entered your buy. Right click. Modify it. 40 pips, 20 pips. Click that. Make sure it goes in. Click that. Make sure it goes in the box. Click it, and you're all set. And you have 20 pips to the upside. So we're good. We're good on that one. And let's see here.
The other ones don't look so hot.
No, I'm with you on that one, Bri.
Especially pound CAD.
Yeah, that's what I'm looking at right now. Holy upward trend.
Yeah, we can look and see where our little chart is over here. Right now, we're up 12 pips on the Aussie Swiss. We're up 4 pips on the Aussie yen. And we're Swiss yen. We just got into that trade, so we can expect we had a little bit of a spread on that one. So everything's good on that. And SE, we were looking at the New Zealand US. That was the other one that came in.
What was it now? I closed my little window.
Yeah, it looks like New Zealand US. Possibly.
It was, yeah.
Kiwi US.
New Zealand USD, Kiwi USD.
Yeah.
And
And Swiss
up
CN.
move, down arrow, no trade.
On another note, Gearbox took profit and I'm out of it again, and I saved 15% using Geico.
Ah, na.
Yeah, I know, right? Look at this guy.
Oh gosh, what I have to do to get good trades before I teach fourth graders.
British cat. So we have the British cat.
What'd you say your percentage for the week was, and you're already out?
I'm up. I don't know what the percentage of the week is, but from November 30th to now, I'm at 36%.
With like no drawdown.
I think 7 or 8, something like that.
That's laughable.
Yeah, it's not.
Okay, we have a up arrow up. We have 3 green, 1 red. Up arrow, put it by the zone. Now I know what my direction is. We have a down arrow with an uptrend, no trade there. We can scroll down a little bit and see that's confirmed. You have to don't forget to zoom out a little bit so you make sure you get all the zones popping up. And so we had a down arrow with an uptrend, no trade. And this could actually be a nice little Fibonacci, except I don't think you'd have enough room to the downside. If we had this move up, we're in an uptrend. Here's the pullback. We draw our Fibonacci lines.
Yeah, before I run, I'm going to put, excuse me, I'm going to put our chat box, our Telegram address back in the chat box for you guys. Those who are wanting to keep up with Hawkeye session in the morning, it's in the chat box now. I got to run, teach some fourth graders.
Thank you so much, Brian.
Hey,
And,
no worries. We'll see you later on this afternoon during the breaks.
See you later, Brian.
Good luck with your trades, guys.
Thanks, friend.
I think Mark also put it in the Telegram for the Arrow bags chat.
Yeah, I saw that as well.
Yeah.
That's much appreciated. Much appreciated.
So let's see, with this, what we had here was we had here's our strong move up. Here's our retracement. Remember, this is a Fibonacci level retraced to the 62%. So from this move, it came back 62% of the move, and it gave us an up arrow. Now, when it gave us the up arrow off of here, the zero line would be our first target. Our stop would be the 5 pips below this area down here. So if I were to move my stop, we're looking at 5 pips. So right there is, there's the 79 line. That's 74.45. So 74.35 would be where the stop would be. And the entry would be, let's see, probably, I guess the top of that, where I think the first close above the, I think it would be first close. I believe it's the first close above the moving average, which would be this candle right here, and then this would be your target. It isn't a strong down arrow, but you're actually forming you have a little bit of a trend line going here. So if you look at the trend, you're looking at an M right here. Here's the first leg of the M. Here's the middle of the M. Should come up and retest this, at least up in the zone. Now, if you have a zone right in here that you may be looking at a target here, this is be kind of an iffy, but it did come up. Let's see how far that went up here. It's a little bit close to where the zone is, but that's 13 pips. But this would be their target right here on a pullback. This zone probably should go away. If this works out, this thing should go away. Again, your stop is all the way down here. This is your stop. And that stop would be, let's see what the measure of that would be. If here's your entry. And that's 43, 42 pips. So that's pretty close as far as what the normal stop would be. But your target would be here. And this would be your target 1. This would be your target 2. Well, actually, no, this one goes 62% retracement. Your target 2 and then target 3 would be, actually, you'd be looking at a target all the way up here for the target of this move if this trend continues to the upside. And that's about all we have with that. And right now we still have this thing's starting to go from red to green. That means it's just trying to cross over this moving average.
So Davey says, don't you close active trades when opposite zones are popping up? Davey, if we see them and after analysis, then yeah, at least I do. I don't know, gentlemen. What do you?
Well, it all depends on what you're trading, right? What system? What strategy are you trading? Will depend on how you manage your trade, and what time frames as well, right?
Yeah, I believe the strategy that we're teaching right now, though, is that if a zone pops up in the opposite direction, then you can exit the trade, or you could exit the trade. I mean, this is where the I think that's a pretty cut and dry for the bags entry, is that if a zone pops up, you get out of the trade. Personally, I think that's somewhat subjective, because sometimes a zone will pop up. It's a really weak zone, and it may just have a small little pullback, creates a zone, and a lot of times you're getting out of really good trades because of that. I pretty much just let it go with the if I see a zone where it forms, where you have a wedge, where we can form, and that's why these wedges are so valuable, is because if you have a trend, like in this case, if you have a trend, which you have the low here, this is the beginning of the trend. Here is a retest. This is where the first hit is. Now this is the first hit of the trend line. So here's the anchor. Here's a hit. You can see it rejected this point right here. So now if it comes back, if it formed, if you're, let's see, we're in an uptrend. So let's see you take it along. It came back and formed a green, a red zone up top here like it did. Just because it formed the zone, if it came back and retested, well, you're long. So if it, how should you put this? I'm trying to think of the scenario here. If it basically right now, I'm looking at, we have a bottom trend line, we have a high, we have a lower high, we have a lower high. Right now, it's still, even though if it created another red zone here, I would not necessarily be out of the trade, because it could be a very weak zone. And it's a likelihood is this zone right here, there's a good chance this zone is going to go away. It did form a zone, but if it forms a zone way down here, I wouldn't necessarily get out of it, because it may be weak enough to where you can just hang into it. If it breaks the bottom of the wedge, I usually like using my criteria. I have a trend line. If it breaks the wedge, if it breaks, it comes back down and retests it without going back into the wedge, then I would be more apt to exit the trade and say to myself that, because now if you're long, it's probably going to maybe retest this area down here.
Alan, I agree completely, because, but I also know where you're coming from, that it's a little bit subjective, because what's going to work, the guidelines that are out there are going to work, and they're going to have that percentage to them, and it's to protect the vast majority of people. But if you're an experienced trader, or you've taken a volume of these trades, then the basic foundation, you can deviate a little bit. But unless you got a really good win rate and percentage, and you've tested the system, then maybe it's not a wise idea to go into the red zone. But Al, he's saying, hey, you know what? It looks like it's going to keep on going through, and I've taken enough of these trades to know that those zones do disappear every once in a while. Then I can take that trade. So that's where observation and a volume of demo trades is going to help you so much with this.
And that's part of the reason why we're going through these technicals of this. This is the price action analysis that helps you make those decisions. When we have new software comes out and there's a certain strategy, we try and stay with that strategy. But the strategies are basically, they're set for the person that just tell me one thing to do, give me one rule to do it, and I'll do it over and over again. And that's perfectly fine. And that's what we're teaching to the person that has the least amount of background knowledge of trading. What we're trying to do is give you tools in your toolbox to help you make some of those decisions within parameters that make sense and easy parameters. You're in an uptrend. You see, you can draw where there's a little bit of where the low, the high. You have the pullback. You have a pivot point. Well, you know that if you're within your stop loss and it bounces off of that, you know that's a pretty valuable point. Same way with the upside. Now, if it breaks out and comes up and rejects off of that, you may say, well, I'll just get out of this trade because this zone held. But you also don't want to be getting out too early because you may be able to hit that target. Maybe you'll get that 20 pips, or you may be able to go for a longer run. But right now, it's in the consolidation zone. It could go either way. We have a nice little downtrend. You can see where we have a high, we have an anchor, a hit. We had a break here. But we're making a little bit lower lows. It's in the channel, but now we have a trend line here. We have a channel that's developing. And this is the tidbits of stuff you just don't always get every place. And this is what makes this company so nice, is that we're giving you live trading scenarios to answer those what if questions. And so you have a downward channel, but you have an up move, a downward channel with a pullback, and now you have the break of the channel. This is oftentimes with an uptrend. This is nothing more than a retracement pullback right now in an uptrend. Now, if it starts breaking this, that means it could go as low as this point right here, and you'd still be okay as far as being an uptrend, but then it's just more of a sideways motion, sideways. But usually, a lot of times you get a strong move up, a pullback in a channel or a flag, and then it breaks up and then goes up to the upside. The potential of this trade reaching up here is relatively high. The potential of it coming down here and before it gets up to here is relatively low. So you have a higher chance of it getting up here than you do of it coming all the way back down here.
Al, would you say that trading is about stacking your probabilities in your favor?
It's entirely because you can't predict. You don't know what the charts are going to give you, but there's enough probability by the way the institutions trade and the way they enter their trades and the way they manipulate their money. There's enough commonality into certain price patterns that if you can see how those patterns work, you have a higher probability of winning the trade. And that's all I have to say about that. Swiss yen, that's where did we look at that Swiss yen? Did we do that one?
Yeah.
It was the same area.
We're in it.
We're in that one. Okay.
Okay, Matt, you had mentioned something about talking about correlation.
Yeah, correlation. But actually, the one who knows significantly more about correlation, to my knowledge, is Mr. Al Mittman. I can explain the basics of correlation and what it actually means. I personally, this is me personally, I don't worry too much about correlation because I just. But here, this is the basics of it. Everything is connected to something else. So USDJPY moves in the same direction as another currency pair. Now there's a percentage that the certain currency pairs are correlated to each other. And so, but they're not 100% correlated, which means that they're not going to move in the same direction 100% of the time. Generally, there's certain currency pairs that are correlated together and one moves and the other one moves in that direction. But there are scenarios where, say, the British, just because you're strong in the British doesn't mean you're going to consider taking a buy on all of the British pairs. Do you know what I mean? Like, does that kind of make sense? Like, just because the British is really strong doesn't mean that it's going to be really strong against the Kiwi and the US and the yen, overall it could move in that direction, but you're not going to want to take buys on all of the pound pairs. It's just, I don't want to get too much into that specifically because it's not an area that I'm honestly comfortable talking about, because I don't trade a lot of correlated stuff. I know that Jackie does a lot of correlation stuff. Like she's Jackie and Al are like king and queen of correlation when it comes to that. So I'll let them address it more than that.
Here's a little something that I've have some access to. It's basically what it does is shows you the correlation of at any one particular point in time on any particular time frame of how strong one currency is versus another. It goes a little bit like with the heat map that Dante has mentioned, if you've ever been in his sessions. But you're looking at a certain pairs are stronger to the other pairs on certain time frames. So basically what we're looking at, for instance, like on this chart, on a 1 hour chart, the US dollar is the strongest of all the 8 major currency pairs. It's the strongest. And the New Zealand dollar is the weakest. That's on a higher time frame. And you can see even on the next lower time frame, which is a 30-minute, the US dollar is the strongest compared to the other 8, again to the New Zealand. Same way over here and same way over here. So if we were to get a trade that pops up with a US New Zealand, and let's just take a look at a US New Zealand pair. And I'll come to the US, New Zealand USD, open that one up. And you can see that the dollar is, now you see it's going down. And you say, well, I thought you said the US dollar was the stronger of the two, which it is. But keep in mind that when you have a currency pair, that when you look and see which pair is stronger, if it's the first currency of the pair, like this case, it's New Zealand, is the first currency. Well, if New Zealand was the weaker, think of it this way, is if you have a stock and the stock is weak, it's going to go down. If you have a stock, think of that, the New Zealand part of this pair, New Zealand, is the first currency of this pair. And you just look and say, well, if the New Zealand is strong, it should be going up. Well, if it's going up because it's strong, that means the other one is weak. Well, if this is, so if it's going down, that's telling me that the second currency of the pair, which is the US dollar, is the stronger of the two. And you can see that it's coming right down. And so I would not want to be, we have as I'm seeing an up arrow on this one, we have a down arrow, but we also see where we're in an uptrend. So this tells me this is probably a pullback. So I'd like to try to trade to the strength of the currency based on so right now the dollar is stronger, but it's coming right into the zone in an uptrend. So that tells me this is probably a pullback unless the trend is starting to change. And we can zoom out and see if we have anything other that says. So basically, here's an up move. This is a pullback. Let's pull it back right into this zone. And you can see this zone was tested several times. Now, the fact that the dollar has been stronger and is hitting this zone, I would expect those to flip, and the New Zealand starting to get a little bit stronger. But meanwhile, it's still in a trend. But I'll use that a lot of times as a deciding factor whether or not, if it's an iffy situation, do I think is there enough strength of the currency to get me to my target? It's just one of those little tools that we have to be able to use.
Excuse me, Al.
Yeah.
Yes.
Okay. Sorry, Christine.
Okay.
Charles is asking if we can quickly have a look at the Euro Aussie. He used strategy number 2. I guess that's with the M's and the W's, and he's in huge drawdown at the moment on the 1 hour chart, and he just would like our take on it.
Euro Aussie. Let's take a look at this one. All right.
And while you're pulling that up, I just wanted to make a suggestion. When I was first learning to trade, someone explaining to me as far as with the pairs, which one's the stronger, which one's the weaker, kind of thinking of a seesaw. So if we know in that last one that the US was the stronger pair, right?
1
It would
hour.
be the higher point in the seesaw, and the lower point would be the kiwi. So that's why the kiwi was going down.
1 hour
helps
chart.
anybody.
Now on the 1 hour.
Oh, 1
please.
hour chart? Oh,
Sorry,
okay.
Christine. It's just that we're running out of time, and I'd like to be able to have a look at this.
Oh yeah, we have to. Yeah, we have 1 minute left, and we got to go set up
that's
the other
right.
room.
Yeah. Euro Aussie 1 hour chart. Which direction are you in?
Pretty big due to the retracement. Sell. He's in a sell.
You're going short on it. You're going short because you have to see a strong up.
It is a strong
let's see if
down.
we do
Yeah.
this in here. And we got this. Well, let's see. I would say you should be okay to the short side. You may, and you're short, and I'm not sure where you got in. You probably got in on this arrow over here. Could be in this thing for a while. The range is about 162 pips. Right now, it looks like it's range bound. The question is, I'm not sure where your stop is. If you took an hour chart, you should have about 100 pip stop. If you got in, say, on this candle here, I'm just surmising, you'll be looking at 100 pips to the upside. Well, your zone, you're basically at your zone. Yeah, boy, I don't know. I think this is one of those where it's range bound. Depending on what your entry is, you're gonna looks like you're gonna take some heat on it.
What pair? I just want to check something on my other charts.
Right now I'm looking strength to the Euros has some strength to the Aussie on pretty much all the way across the board. So until that, I think it's probably going to retest. It's probably a really good test. It's going to retest the zone. So I say if you're already, I would expect it's going to probably come up here and retest this zone up here. So from where it is right now, I think you probably have another
58, right?
You have another 30. You have another 30 pips to the upside. I say if you're in a heavy drawdown, you may want to cut your losses and wait for it to come back up and try it again. But right now on the 15-minute chart, I think we're probably in a downtrend, and you're just going to be taking some heat. There is I would say you're probably going to get a retest of this zone up here. We still have. Now we probably need to get out of here.
Yeah, we actually need to get out of here.
You can always come over and what you can do is come over and ask on Dante's session. Ask the same question. We could do a further analysis.
You know what? That'd be a great idea. You know what? Maybe we could start with that one. We'll have a couple more panelists in there as well and get some other insights. But let's go meet you guys all over there if you're coming, and look forward to continuing this call with you guys later. Thank you so much for coming.
I thank each and every one.
Thanks a lot, everybody.
And we'll see you maybe in Dante's. Take care.